Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today with me, Shell Bhatnagar. We are going to be helping you understand the closing action on the D Street. Joining us will be top market experts to decode the market momentum for you. 24,160 right now on the Nifty. It's a 20 point of an uptick. We've been seeing extreme volatility since morning. The Nifty Bank has come off the day's low point, but it's still holding about 1/10% lower in trade at 49,751. About 80 point of a dip is what you can see. What's doing well is the IT space, that's up by 1.3% for the Nifty IT index. Autos are also just 0.2% higher in trade. Flattish trade on the Nifty, next 50, financial services and consumer durables, but the rest of the spaces have all slipped into the red, with the metals dragging over 1% in trade. Pharma, broader markets, mid and small caps, oil and gas, private banks, they've all slipped into the red as of now. Within the Nifty, you do see some spots which are actually doing well at this point in time. Major stocks are still lower. Stocks like Hero Motocorp are still down by about 3.5–4% odd. You also have stocks like Divi's Laboratories that are dragging, but IT space stocks like TCS, HCL Tech, Infosys, Tech Mahindra, they are definitely up and about, and M&M and stocks like Bharti Airtel are also buzzing in trade. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. Very quickly, Masgaon Dock. The earnings have just come in and they are beyond belief. First quarter net profit at 660 crore rupees versus 287 a year ago. So that's easily mathematically 125% higher. How about revenue at 2,360 crores versus 2,173 crores. You have a huge margin expansion to the tune of 2,000 basis points. EBITDA margin is 27.25 in the quarter gone by, compared with 8% the year ago. EBITDA 642 crores versus 172 crores, and there's absolutely no reason for the stock not to shoot up, and that's what it is doing. 4.8% higher at about 5,067. This is the latest earnings that has come in. A few moments ago, it was Hindustan Aeronautics. First quarter consolidated net profit at 1,440 crores versus 814 crores. This is also a huge beat, 75% higher. And of course, you see revenue surging to 4,340 crores versus 3,920 crores. So two earnings coming in, and of course the markets are stable. We have the weekly expiry for the Nifty and the Bank Nifty today. Both of them are flat. There's a huge movement on Nifty IT. And without further ado, let us welcome our guest. We are delighted to welcome Mr. Sharad Awasthi, a man of few words, but all of them spoken with a lot of weight, a lot of emphasis, and a lot of wisdom. Namaste, Sharadji. It gives us always a great pleasure to welcome you, sir, especially at a time when markets are volatile. How do you see sentiment on Dalal Street? And would you want to comment on earnings from Masgaon and HCL?
Namaskar ji. I think sentiment-wise, we could be in a phase where, maybe a month or two kind of base formation, where we create a base for another big rally. Because the numbers that have come in have not been very euphoric across the board. And Q1 generally is not a very euphoric quarter because the banks don't take any front seat. So I think that portion has slowed down. That also slows down the whole sector, whole index earnings as well as broader earnings. But beyond that, I think there are not many negative surprises also. Gradually, some pockets which were maybe heated or probably overheated, they have corrected a bit. That's the only thing. But other than that, I think broadly maybe a base formation kind of time where we don't have much of a movement because we have gotten in the habit of having big movements over this calendar year and even in the financial year. And most of the news has been digested very well. Globally, the interest rate cuts should harbor in one rally at least by the year end. So maybe a base formation over the next month or two, and then most probably we prepare for a big rally from there on till the year end. Regarding HAL and Masgaon numbers, I think Masgaon numbers certainly look much better. Everything from margins to revenues, everything looks very upbeat. And HAL also, the numbers are probably better than expected. The year-on-year growth is very good. The only flip point could be that these are not stocks now which are available at very attractive valuation as they were around 1.5 year ago. So I don't think it's now very attractive valuation, but certainly if you're a long-term investor, you can extend your horizon to 2 to 3 years. I think then you might be in for some positive surprises in most of these stories because the long-term trajectory is very much there, where order books might, swell up by 2x or even 3x in some cases. But obviously, don't expect linear kind of movement, and these businesses should not be looked at on a quarter-on-quarter basis. But I think the long-term view can be taken. Then you should gradually try to accumulate the stocks.
Okay. Good afternoon to you, Sharadji. Thank you so much for taking the time out and joining in. Also wanted to ask you, we haven't had you since the entire Hindenburg research report came in, the entire volatility spilled through in the Indian markets. How have you assessed this report and, the impact on the markets? We were sharp to come back, but we are still faltering. What are the key reasons?
Good afternoon, Sakshi. I think if you look at the internals of the report, even last time I was not very impressed with whatever they had sought out in the report. It seems like vague storytelling largely. And I think the quantum of amount that has been spoken about and everything else seems very meager for the size of Adani. And I think again it's a very shoddy way of trying to prove your point, and I can't draw any relevance to the numbers and the report and the structuring of the report. And I think there was very little to dangle about in the report that something is very impressive and something that was not known to us, or something was really material to doubt the entities and the people who have been brought under question in the report. So I think regarding the Edinburgh report, it should be treated as a non-event, and I think the markets have done that. Regarding other issues, I think, as I told earlier, broadly, I don't think, I think the markets have run up a bit over the last 6, 7 months. We have brushed aside too many uncertainties, the budget, even capital gains, the election results, which were not according to our expectations largely, or the market expectations. But still, the market has digested it very well, and we have come through it. The initial uncertainty around, that maybe a stable government is not going to be there, that's given way to a very good stability. So I think that's gone behind us. And now the next figure, most probably the market is waiting for, is the interest rate cuts to finally materialize, which I personally have been waiting on for around more than a year now. And something or the other just kept up, and it did not materialize. But most probably over the next 3 to 6 months, you will have material changes in the interest rate outlook, and that should probably provide the next leg up for the markets.
Right. Sharadji, it's almost curtains now to first quarter, and you very rightly summarized that it's nothing much to talk about. Yet, there must be some companies that have outperformed even your most optimistic estimates. What looks good post the April-June numbers, and where do you see momentum continuing?
I think chemicals, and within chemicals, agrichem could be something that should do very well going ahead, because most of the commentary seems to be suggesting that most of the pain is behind us, and valuations are still not caught up in most of the cases. So I think agrochem and chemicals could be one space you could look at. This quarter numbers were not very surprising or not very encouraging, but I think the forward commentary is very good. So over the next 2, 3 quarters, you would continue to see good gains out of that. uh, some of the finance companies that could play out very well, what a medium to long term. Some of the nuclear and hydrogen companies could do very well. I think there is expectation that some order inflow might improve from the US also during the second half of the year. So that should result in some improvement for some drone related and defense related companies as well. So I think there are pockets where you could look at. I think over the next 6 months, if I have to spot out one, I think agrichem certainly looks like a place you can be in. And within that, I think UPL always remains my best choice.
Got it. How are you assessing the downtick we saw on HDFC Bank, sir? And because of the MSCI weightage that was not increased in one go as per the street estimates, we did see a sharp reaction to this one. How would you really assess the move on HDFC Bank? Will it take some more time to then recover from this blow?
I think very little time. I think the focus will be on numbers and commentary going forward. This quarter, we have seen some bit of re-rating after the numbers. Initially, there was some reactions that most probably they are very bad. But now, gradually, people are getting hold of what it was actually. And I think most of the numbers that the bank reports from here on, every quarter, you will see an improvement. For the first time in a while, we are seeing HDFC as aggressive as it is today. And with the merged entity, it is a much larger entity. A lot of cross-selling opportunities there. But obviously, you cannot expect it to materialize in 3 to 6 months. It might take some time. But I'm very hopeful that at these valuations, I think I'm very comfortable holding on to an HDFC. And I would use this opportunity, the small dip that we have, to accumulate it. Initially, I'm working with targets of around 1850, 1900, and on the optimistic side, maybe 2100 kind of targets on the stock.
Shariji, if you look at how pharma has shaped up, it's sort of reduced the pain, if I may put, of the last 4 or 5 years when none of them were performing. What looks good in the pharma space, and where do you see this momentum continuing?
I think the API space could still continue to see some improvement. The generics could see some improvement. But across the board, if you look at valuations, I think the type of catch up that most of the companies have played. I think there is little room for further upside. The frontline names, the Ciplas and the Sun Pharmas, they would largely give you market linked returns. Dr. Reddy had been our choice for quite some time. I think that has also performed pretty well. If you look at plain valuations within the larger stocks, I think Dr. Reddy is still one of the most attractive bets if you look at plain valuations. But in terms of future growth and everything, where a re-rating could possibly happen, I think the smaller companies, you could have some companies where you see a lot of re-rating. Laurus may have a lot of scope. I think there have been some price improvements. But on the flip side, I think the challenges that they will face is related to, costing with related to export sales. The transportation costs have been going up because of the Red Sea issue. I think if that is a problem that shows up in most numbers in the next quarter or so, I think that could be a problem, because even during COVID, most pharma companies did flag it as a very big problem for them in terms of costs. So I think that is a problem that they would face. And now it's not that across the board valuations are very hunky dory. So I would be a bit skeptical about trying to bet more on pharma at this point in time.
Okay. How about some of the new age IPOs that are coming up? Have you looked at any? Ola Electric, Unicommerce, IPO, anything that you have probably come out with a report on? And of course, we've actually seen substantial surge in some of them already. For Ola Electric, it was 2 days back-to-back 20% circuits. The third day it went up to 18%, came down lower. How are you looking at some such momentum? And for Unicommerce, it was 118% surge on day one itself. For First Cry, it was about 40% as well. Anything that interests you within the IPO space?
Not amongst these two. I think Unicom I haven't looked at in depth, so I won't be able to comment. But Ola, I think the big trigger is with relation to the factory, the Giga factory with relation to batteries. And we all understand that EV component localization is an important aspect if India has to achieve the type of EV penetration that we are talking about. So I think that's a big change, and they are also very gung-ho about it. So I think I would want to see how it materializes. But this is again a long-term game in terms of current valuations. I think it's already trading out what 8 to 10 times EV to sales. So there, I don't think there's much scope, to take the risk from there here on, unless and until something very material comes up. So at these valuations, I would not be very happy buying into an Ola Electric. Within some of the recent IPOs and the platform companies, I think when I look at across the board, I think maybe a Yatra Online is a good name, though it's not a recent IPO as such, but it's been there for some time. But it's a relatively new kid on the block. I think the type of B2B business that they are trying to ramp up, and the type of growth we are expecting over the next 1.5 2 years, I think that they should do very well. The new customer acquisitions have been very strong. They have around a customer base of around 7 million customers whom they can cater to. And they're also launching some new products in the B2B space. So I think at 3-4 times EV to sales, this is probably a much better bet than most of the other frontline well-known names. Another one that I like is Honasa, but I think unless or until the new products can kick them into a different overdrive, at these valuations, even Honasa might not be a very attractive name to have on your list. So I think within the whole list, if I look at, I think Yatra would certainly be my preference.
Fair point. And within the hard work that your research team does, Sharadji, for picking out potential winners for your clients, a couple of names that you may want to share with our viewers as well. Where do you think lies value in this kind of a market?
Yeah, I think two more names can be added to the list. One is Fusion Microfinance. Recently, the company had come out with numbers, and because of NPA issues in Punjab and prudent provisioning, the numbers have gone up substantially, and the company reported a loss in the current quarter. But I think it's a one-off thing, and over the next 2-3 quarters, we will certainly see improvement out of that. And the company has also expanded across India rather than focusing on 4 or 5 states as they used to be around 3-4 years ago. So now most of these quarterly branch expansion is around 118, 120 branches. Right now they are around 1,350 branches. And I think they also stopped lending on some of the branches. But all said and done, I think this is something that in prudence the company has done. And they are largely lending to smaller ticket sizes. So I don't think that across the board this can crop up into a big problem for the company. The capital adequacy ratios, etc., are in order, so I don't think they need additional capital. And once over the next, 2-3 quarters, the GNPA number improves. I think advances growth, etc., and NIMs have been there at the optimum levels, and that should continue to be the case. So there is a high probability that this quarter was an abrupt quarter, and next quarter onwards that starts to improve. This company could see a substantial, re-rating from these levels.
Okay. Let's shift gears a bit and ask you. Yes, sir. Continue, please.
Just a moment, Sakshi.
Sure.
I believe Fusion is trading below its IPO price, or at least definitely its listing price. Am I right?
Yes, sir. All-time lows.
Okay. Ladies and gentlemen, that's the beauty of interacting with Sharadji, that you get to sort of buy a quality company at a time when it's not doing well. So when you look at Flair writing also, this is almost how would I say, fairly close to its all-time low, which was 256. We are now at 290. So we are noting down Flair and Fusion from your end. Sharadji, just one point of caution from your side if possible. Does micro lending at this kind of an environment where even NPAs in established lending names are creeping up, does micro lending as a high, how should I say, risk item appeal to you?
Yeah, you can consider, but I think compared to the traditional loan book where you have 3% NIMs and 5-7% kind of NPA probability, I think this is better where you have a high NIM which is around 10-11%. So in net, the bank or the finance company actually does benefit out of that. And more than that, I'm very bullish on the MSMEs part also, which they are also looking at. They have also enhanced the MSME business over the last 3-4 years. And I think MSME and micro lending is the need of the hour in a country like India. And regarding the urban infrastructure and the urban population, I think they have a lot of options. But the semi-urban rural area is the unbanked area. And I think there is very little competition for companies like Fusion Micro. And the granular book also does help them. But occasionally, some calamity or some problem in a particular region can shape up a higher NPAs. But that gives you the best opportunity to get into these stocks. Like if you look at Credit Access Grameen over the last 2-3 years, 3 years back, 2 years back, no one was looking at it. And today, Credit Access Grameen, once they've turned it around, they look a different company. And the valuations have already cropped up to around 3 times price to book.
Okay, we are noting down some of these stocks that you've highlighted for all our viewers, Sharadji, and we'll continue to revisit them as well. And now we'll shift gears a bit. And like throughout the day, we have been paying our tribute and remembering ace investor, legendary Rakesh Jhunjhunwala on his second death anniversary. Just wanted to ask you as well, if you had an opportunity to meet him in person, what are the things that you picked up? Any conversations, any anecdotes that you could share for all our viewers?
No, I haven't met him in person, but yeah, I've largely watched him on TV since way back, and he was one of the persons actually who was very nonchalant about how you used to talk, and he could take the anchors to the classroom very in a very stern fashion at times, and very entertaining. I've heard him on some of the calls also where he was very blatant about what the companies were doing wrong. So I think he was a mix of being blatant at the same time being having that side of humor on his side, but obviously the eternal bull that India always needed. So I think his story is something that you can always talk in detail about a lot of things, and I think there will be many more better people than me to talk about it. But certainly his story is worth every time, and it's very encouraging to find someone move from one aspect of life to another. I don't think he started very big, but from there on to become the mainframe person, I think it was a great ability. And some of the counters, the way he held on to it, whether it's Titan or something like a Lupin, through the ages, I think that is something you can learn from him, that how to hold on to stories that can become 10 baggers, 15 baggers. I think that was a very beautiful thing about him.
Right. Sharadji, we've interacted with you, maybe 10, 12 times over the last 1 year. I have some names noted down against your picks. With your permission, let me just take some of them. If you can just tell us whether they still make sense or not. You have Sheela Foam now at 911, Responsive Industries at 271, Polyplex at 1174, and I think you also mentioned NCC. These are the four that I remember offhand, sir.
Responsive is not something I said. I think that's not my call. But the rest of them, I think Polyplex has rallied handsomely. So maybe, for the immediate term, it might be fairly to fully valued. Bull markets typically, 1.5 year targets happen very fast cliff. So I think that's probably happened a bit faster than my expectation. The other two, I think Sheela Foam hasn't really done much. It went up a bit, but after the quarterly numbers, it's come back. But I think it's a very strong story. The type of diversification they have done in 2-3 aspects, I think that should play very well over the next, 2 to 3 years, whether it's the furniture foam business, auto foam business, or the plain vanilla, Kurlon and Sleepwell mattresses. I think Sheela Foam should be a very good bet over the next 2 to 3 years. And I'm hoping as the numbers improve, the valuation multiples could substantially improve. One more you said, which was that?
I don't think NCC was yours, but was Edelweiss and Monte Carlo something that came from your stable?
Yeah, I think Monte Carlo, I still continue to be bullish. It's not done much yet. And the type of diversification they have done across all kinds of clothing as well as into shoes, I think that's a company that is something that you can watch over the next 2 to 3 years. Once this brand story plays out, there could be very strong legs to get strong re-rating there. NCC I may have recommended at some point in time, but now I think at these valuations, I think it's fairly to nearly fairly valued. I don't see much upside from these levels.
I do believe Edelweiss was also one of your picks.
Edelweiss has been one volatile run. I think in terms of valuation, it did look better, but the recent backlash from the regulators is something that's caused some mayhem in the pricing. But it has recovered a bit. I still think that in terms of valuation, the flip side to the story could be that some of the peers have corrected in terms of valuation substantially. which I was a bit unnerved about. This has not corrected that much, but yeah, it did come down and then it's crawled up. But I still think around 85, 90, 95, it should be the fair value. So 90 to 95 would be the fair value to look at Edelweiss.
Okay. Sharadji, before we let you go, how are you reading into this fresh momentum in the IT space? Do you think this will sustain? And anything that has come onto your radar? Earnings have gone back, but now we're going to be looking forward from here onwards. And there are fresh fears in the US of recession now coming in. What would it mean for the entire IT sector?
The US recession. I think that's been an overhang for quite some time, like the interest rate cut. But I don't think that we are going into a full blown recession in the US. I think it's a bit overdone. There are some fears regarding, the amount of securities that they hold on their books, where there are a lot of book losses. But I think once the interest rate reversal trajectory starts, a lot of those losses will get risk recovered, and most of these securities are not on a, available for sale kind of place. So they are like to be largely to be HTMs. So I don't think that's a loss that you should be too worried, though. By historical numbers, that's a loss that's very high, but because of the rate movement, that does seem abrupt. So I think the interest rate movement trajectory will substantially ease that pressure. So that's one overhang on the US side that will substantially ease, over the next 3 to 6 months. So US recession, I'm largely not playing the ball. I don't think that the US is going into a full-blown recession. Occasional dips here and there, yeah, that might be a case, but I don't think that's going to happen. And regarding IT, I think the recovery should be strong enough. Across the board, I think now to bet on the front lines, I think the valuations are roughly fair and square. So if I have to bet, I think on the smaller side, I would like to bet on something like a Coforge. I think the management is giving stronger guidance, so there could be growth, pent up growth that happens there. So that could give you a lot of kicker on the valuations. And one of the smaller companies, Infosys, there could be a lot of re-rating in terms of what the numbers they do with the new investor coming back into the site. So, and even the discretionary spend should go up with interest rates coming down on the BFSI side, and they have a lot of exposure on the US BFSI side, so they could benefit a bit. And if you want to play as a theme, I think the data center theme should be something that could give some fillip to Wipro and an HCL Tech. Wipro is also better in terms of valuation. So I think, though it's been a bit of a boring kind of story over the last few years, but if you're looking at a long-term thematic story, I think then Wipro and HCL Tech do look like a good theme to connect to the data center story.
Got it. Well, we'll also have our reporter Asim joining in, Sharadji, and there is one stock that he's going to be talking about, and that is SJVN, which we'll come to you also to take a view on. But quickly, let's go to Asim to ask, after the strong Q1 show, the way stock has performed, what are the latest brokerage houses reports saying?
Thanks, Sakshi. This SJVN is into the business of generation of electricity and tariff for the power generation. So the stock has gained 407% in 2 years and rose 149% in a year. It's a multi-bagger stock. The company reported its earnings, and on the basis of that, the stock has risen 9% to rupees 149 today. So the net profit rose 31% to rupees 357 crore in Q1 against rupees 271.75 crore on a year-on-year basis. Total income climbed 29% to rupees 958 crore. The market cap of the firm stood at rupees 56,137 crore. A total of 33.27 lakh shares changed hands, amounting to a turnover of rupees 48.37 crore on BSE today. Analysts have a mixed view on the prospects of the stock after Q1 earnings. Kushal Gandhi, technical analyst at Stocksbox, said, despite the stock's current lateral trading, both the daily and high time frame RSI have exhibited a negative slope, signifying a decline in price momentum. Rupees 160 to rupees 153 range has proven to be a strong resistance zone, leading to pronounced rejections and subsequent depreciation in the price. And he has advised to abstain from purchasing the stock at the prevailing market price, opting instead to await additional bullish confirmation before considering a new position. And Jigar S. Patel, manager at Anand Rathi, said, The support for the stock is at rupees 140 and resistance lies at rupees 148 level. He also added that a decisive close above the rupees 148 level may trigger a further upside to rupees 155. The expected trading range will be between rupees 138 and rupees 155 for the short term. Another analyst, Aditya Agrawal, head derivatives at Sanctum Wealth, said SJVN is consolidating in a broad range of rupees 158 to 128 since January 2024. He expects that the stock will continue to trade in this band for the next few weeks before giving a fresh move. Short-term traders can avoid initiating fresh positions in the stock, whereas long-term investors can use dips to buy the stock for the target of rupees 155. Above that, the stock can move towards rupees 175 level. However, a close below rupees 115 will negate positive views on the stock, and below that, SJVN could correct towards rupees 97 levels. He added. Back to you, Sakshi.
Okay, got that. Thanks a lot, Asim, for all that update on SJVN. And we now will wait our other guests to join in now. We will be waiting for our other guest, Amar Singh, to be with us very, very shortly now. To help us understand the rest of the momentum in trade. I think he is with us already. Amar Singh, warm welcome. Thank you so much for taking the time out. Good afternoon to you. You know, we were discussing SJVN with our reporter, the way the stock has moved up, quarterly earnings came in, and this renewable energy space as a whole has been buzzing off late, be it the power space like Inox Wind, Suzlon, or maybe SJVN as well. How would you really look at some of these stocks right now?
So I'll start with SJVN. So SJVN has had a stellar rally. If you go back in time and see, the stock has been a multi-bagger, almost 5x from the December levels. So the stock has generated phenomenal returns for its investors. But looking at the charts from an intermediate term perspective, what we are seeing is clearly there is a consolidation, and that momentum or that upward trajectory it has lost steam. So having said that, if I look at the long-term charts, that still remains strong. But on the intermediate term trend, we are seeing consolidation, and this stock has now gone in a trading range. So from a trading perspective, it can be a good option. So anywhere between 120, 125, 130, that's a good level to enter. Upside again seems to be capped around 150, 155 level. So it's more of a trading play. And if I look at the other stocks which you mentioned, so if I look at Inox Wind has a slightly different structure as compared to SJVN, because this is very strong even on the intermediate term trend. Last couple of days, we've seen some very significant volumes there, and then we've seen some profit booking happening. But the trend is very strong for the stock. So this is one stock one can keep a close watch on. On the downside, the stock has got good support coming out of the 185, 190 zone. That's a strong zone of support. And if the stock takes out its recent highs of 235, 240 levels, currently it's around 210. But on any dip, this is a buying opportunity as long as it doesn't start trading below the 175, 180 zone. So you can keep a close watch on that.
Namaste Amarji, a very warm welcome to you, sir. Would you want to comment on Policy Bazaar? This is showing hectic activity today. On the NSE 500, it's the second most active counter. Needless to say, a record high. Is this momentum giving an opportunity to chase the stock further, or should we stay away?
See, what we witnessed today is that the volumes have been exceptionally high, and the stock, in terms of one of the technical parameters, I wouldn't call it exactly a shooting star formation, which is more of that a stock makes a high and then closes towards the opening of the day. So the range is very, very small. That's not the case, because the open and the close is still significant. So from that perspective, one can say that the trend, though remaining positive, we could see some consolidation now, as long as today's high is not reached, because today's high has been significant. That was almost 1710, and the stock has closed at 1571. So from the highs, the closing is quite low, and also the volume has been exceptionally high today. So this could also indicate a formation of a top if the high of today is not taken out. So I wouldn't recommend fresh entry at the current levels. Those who are long, they can look at booking some profits, but a fresh entry at the current level wouldn't be advised.
Okay, how about Paytm? 5.6% higher, 534. This is also amongst the volume buzzers today. Fairly decent, 35 lakh shares. No, Paytm has, okay, Paytm, one second, where did it go on the screen? Paytm has somewhere like 35 lakh shares traded so far. What's the view here?
So if you look at Paytm, so Paytm has, I would say, definitely bounced back from the recent lows, but it's not been able to, because from 400 levels, currently it's around 535 odd levels. And earlier also have talked about Paytm, that for Paytm to witness any significant rally, because the stock is close to a very crucial resistance zone. So if I go back in time, so somewhere the stock was having resistance around the 530-540 zone. So that is a level of resistance. Or if I go slightly further ahead, then towards the 570. So the stock seems to have formed a base. There's no doubt about it. Sustaining over the 540 levels, it could rally towards 570, where it could meet with some selling pressure. So sustaining above 570, then only expect some major rally to happen in the stock. Otherwise, it could be in for some consolidation. Most of the technical parameters, I would say, they are positive. There's not much of a concern there. But for any significant rally, it needs to sustain over the 540 first, and then it could rally almost 5-6% from those levels towards 570. That's going to be the major wall of resistance for the stock.
The other thing I wanted to draw your attention to is again in the defense space. Of course, we have seen that the defense space has been consolidating. Many of these stocks which have had a one-way rally have been lying low for some time, but some earnings have come in. Mazicon Dock reported Q1 profit that has soared 121% year on year to 696 crores. HCL reported a net profit that has soared 77% year on year to 1437 odd crore rupees. So strong set of numbers coming in from these stocks. Do you think there is enough merit to again look at some of these stocks, or is the good news in the earnings also priced in?
So if I look at Mazgaon Docks, the stock has been witnessing some sort of profit booking, and that's I would say is very healthy, and that's because from almost 5,860 levels, the stock has recently made a low of 4,500, 4,550, and then towards currently it's around 5,000 odd levels. So I would say that if I look at the charts for Mazgaon Docks, it continues to be very strong on the long term, on the intermediate term trend. So effectively, it means is that it's a buying opportunity for the stock. Now, what has happened in the stock for the last 7 to 8 trading sessions is the stock is I would say trying to reach about the 5,000 level, 5,050, 5,060. That's a immediate zone of resistance for the stock. Taking that out, we could witness some sharp rally in the stock towards 5,400, 5,500 levels. The recent lows are very strong support for the stock. If the recent lows are taken out, then the stock could witness some sharp correction, which was the recent low, if I talk about, that is somewhere around 4,500, 4,540. So 4,500, 4,600 should act as a very strong support zone. So as long as that's not being breached, I would say the trend still remains strong, positive on the upside. 5,050, 60 is breached, then we could witness a spurt in the stock towards 5,400, 5,500 levels. Because the structure of the stock continues to remain strong.
Fair point. 3:12 p.m. ladies and gentlemen. This is about 16 minutes left to trade. Remember, we are on a twin weekly expiry today. Tomorrow is a holiday, so the expiry that Bank Nifty had to undergo on a weekly basis has been pulled a day in advance, and of course you have the Bank Nifty weekly expiry as well. So flat on the Nifty, equally flat on The Nifty Bank, nothing at all. Nifty 500, the broadest measure that we have, is down 34 points. Nothing absolutely at all. The IT index has been the flag bearer of bulls as far as markets are concerned today, and it's up about 1.3%. But overall, the sentiment is muted, and that's visible from how volumes have shaped up, as also advanced decline. For the bulls, it's on the back foot today. 800 shares in the green compared with 1500 in the red. We tracked 19 indices for you. Out of 19, just 4 of them are in the green, and none of them are worth mentioning. The increase is such a minor amount. Metals index has taken it on its chin. A Supreme Court ruling on a very old case now allows states, Indian states where mines are there, to charge an extra revenue, extra royalty from what all metal companies pay to the central government, over and above that. Therefore, you see a very sharp fall in metal stocks. Out of the 15 that make up the index, you have 12 of them in the red, led by a fall in NMDC, led by a fall in Hindustan Zinc, as also Nalco, and of course Tisco and Tata Steel as well. These are the counters that have taken it on the chin. 6% down on NMDC. Hindustan Copper, despite a sterling set of numbers yesterday, down 4%. National Aluminium SAIL down 3 and 2% respectively. What's in the green within the metal space is Jindal Steel and Power, 2.2% higher. APL Apollo, 0.5% higher, and Jindal Stainless, 1/3% higher at 696. Sakshi.
Yes, there are some names that are coming up, and let me see in the gainers list what all can I pick up for Amarji to share his views. We have Grasin that's up in trade. We also have Pokarna Limited that's up 20% circuit. Kitex Garments is at a 20% circuit. SH Kelkar, that's a company that's after a long haul has come back, 17% of a surge for this one. Markson's Pharma, Shell had highlighted this in the morning, is 15% higher in trade. Edelweiss Financial Services, another 12% up in trade. Prakash Pipes is doing well. You also have stocks like Sarda Energy, Kirloskar Industries, that's up 8% odd in trade. Asahi Songwon, that's up by 8%, and Chennai Petro Corporation is another stock that's been buzzing in trade, I think about 7.5-8% higher in trade. Amarji, anything that catches your attention within the broader markets? Where are you keeping your focus?
Yeah, I would say that Chennai Petro, which you mentioned, seems to be looking for some upside move because the stock did rally significantly. If you see the stock had made a high of 1275 on 16th of July, and from there the stock corrected sharply towards sub 900 levels. And currently today the stock is about almost 7-8%, and it's trying to breach the 970-980 zone. That's the zone of immediate resistance for the stock. Sustaining over the 1000 mark, the stock has a potential to rally towards 1100 odd levels. But here one needs to remember that though the long-term trend for the stock is very strong, the intermediate term trend is clearly now, it tells me that this stock has gone in a trading range. So it's very good from a trading perspective. 900 on the downside, 1100 on the upside. That's a range where the stock is likely to trade into. As long as it doesn't breach the recent close, we could witness some good range play in this particular stock.
Okay. Right. Amarji, another thing that you could highlight perhaps is for us within the auto ancillary pack. Is anything looking interesting to you? Stocks like Samvardhan coming back into fore. In the F&O space, of course, it's the top mover, about 3% high in trade. Earnings came in. What looks good within the autos and the auto ancillary pack? We've actually seen Hero Moto drop, after the earnings, and that's pulled down some of the auto stocks even lower. But auto ancillary, there is an interesting momentum that's developing.
So amongst the auto, we are seeing some sort of movement there. And some sort of profit booking also happening in some of the auto stocks, because if you look at the tire stocks, Apollo Tires, that's witnessed some decent profit booking from the recent highs of 570, currently around 490. If I look at Ashoka Leyland, it's now profit booking which is being seen there. If I look at Bajaj Auto, again very strong on the long-term charts, intermediate term trend, we are seeing consolidation. So effectively, it means is that now higher levels for the stock to rally is going to become difficult. So that's the case of Bajaj Auto. If I look at some of the other stocks in the auto space, like Eicher Motors, again similar pattern. We are seeing consolidation there. If I look at Exide on the battery side, the stock has corrected, and from almost 600 levels to currently on 486. Long-term trend very strong. Intermediate term trend consolidation, short-term trend negative. So effectively, it could consolidate if it doesn't reach the recent lows, or I would say 450, 460. That's a very strong support zone for the stock. Any pullback towards those levels, that can be a very good buying opportunity in terms of risk-reward ratio. Hero Moto Corp, which you mentioned, Hero Moto Corp, the stock has corrected almost by 3% today on significant volume. So last few days, the stock was trying to consolidate, but the pattern on the stock is that the long-term trend is up, intermediate term trend is negative, short-term trend is negative. That's the reason we are seeing some sort of sell-off happening. Mahindra and Mahindra is one which is trying to inch up. So because on the intermediate term trend also, it's not very weak. Long-term is very strong. Short-term, we are seeing some sort of consolidation there. So sustaining over the 2800 level, the stock could rally towards 3000. So this is one stock one can keep a close watch on. The recent lows are very important. For that, lastly, I would like to talk about Maruti Suzuki. Again, Maruti Suzuki, the top has been made. There's no point in entering the stock at the current levels. It's more or less consolidation or range play in the stock.
Right. Tomorrow being Independence Day is a holiday, and of course a major day in the life of Mahindra and Mahindra. They will launch the 4-door version of Thar, and possibly that's one reason why the stock might look up, because you will see a host of bookings for that particular vehicle, which has been much awaited by the community of new buyers. What also is buzzing, Amarji, is the pharma space. Would you have a mid-cap favorite, and also what looks good on the longer term charts?
So if you look at Pharma FMCG, they have been the outperformers. Alchem has really outperformed, has witnessed a significant rally recently also, trading at its record high. You're witnessing some profit booking. Aurobindo Pharma is again on a tear, very strong on the long term, on the intermediate term trend, short term. This is one stock, if anyone has, they should definitely hold on to it. Fresh entry at the current levels, though not, is advisable. Biocon is a touch me not right now, more or less consolidation or selling pressure there. Cipla is now, I wouldn't say the game is over, but yes, there is a lot of consolidation that is likely to happen in Cipla. DBs is one stock one can keep a close watch on. It has corrected today almost 4%, very close to its crucial support zone. So today's low is something which is going to be very important, very crucial. If it's able to hold today's low in the next couple of days, then we could witness a pullback in the stock. It's currently around 46.60, has the potential. If it sustains and doesn't trade below today's low, then we could witness a pullback in the stock towards the 4,800, 4,900 levels. So that's one. And again, lastly, I would like to talk about Dr. Reddy's Laboratory, very strong on the long-term, intermediate term trend. Short-term, we are witnessing consolidation, profit booking. Currently, it's around 6,800 odd levels. Any further correction in the stock can be a buying opportunity, ideally 6,600. That's a good level to look at.
Okay, 322. Amarji, good time to take any BTST, STBT trades. Tomorrow is a holiday, but how should one be prepared for Friday?
I would say that, overall what we are witnessing is that markets are, higher levels are being sold into. So if I look at Nifty, because Nifty is unable to breach the 24,400, 500 zone, and even if it breaches, it's not able to sustain above that level. Having said that, if I look at the short-term perspective on the major indices, be it Nifty or Bank Nifty, they are clearly very weak. So very weak mean when I'm saying, so effectively it means is that higher levels will be sold into, lower levels might be bought into, and the recent lows could be retested. So for Nifty 24,000, 24,100, that's a very strong support zone. Taking down 24,000 could witness lead to a sharp correction in Nifty. So that's one needs to keep a close watch on. And talking about Bank Nifty is also because what's happening right now, Nifty and Bank Nifty both are very close to their crucial support zone. So that's the reason we are seeing some pullback happening in people and traders or investors are assuming that maybe the trend is changing. No, the short-term trend is very weak for Bank Nifty as well. I would say even the intermediate-term trend has turned slightly not negative, but yeah, it's flat. So effectively, it means is that higher levels is not going to be easy. And on top of that, if you look at the heavyweights of Nifty, so be it HDFC Bank, be it Reliance, ICICI Bank, and all. So we are seeing there also we are seeing some consolidation happening. So what's the trigger that's going to be really there for the markets to pull back? We'll have to wait and watch. Maybe that could be a global trigger. But currently, if you ask me, my clear sense is high levels are being sold into. You need to be slightly cautious.
Right. Amarji, before we let you go, your final view in the hope that was built up in the chemical sector and how it came crashing down. Would you have a favorite on the charts as far as the chemical space is concerned, or does it remain untouchable?
So see, chemicals we've seen like Deepak Nitrate has been there. It's been a favorite of mine, and we've liked it quite a bit. Currently, it has corrected significantly this week. It's down almost 7.5%. But I would say it is correcting, but maybe it could be it could give an opportunity for entry sometime next week. Provided only one needs to remember, I would say this is for all investors and traders who are there. Don't try to catch a falling knife. If there is a sharp correction in any stock, you just wait for it to consolidate. And then you look at entry, and also before entry, you should look at the long-term trend, because ultimately markets always favor the long-term trend. So if you ask me about Nifty, Bank Nifty, I'll say the long-term trend still remains very strongly in the green, very strongly up. There's no doubt about it. Short-term, we are seeing this negative trends, which is there. That's part of the market. The same I could say for Deepak Nitrate also. So yes, higher levels could be sold into or looked at profit booking, but lower levels could be looked at buying opportunity for Deepak Nitrate. This week's low is something which is very important, very crucial. So if it starts trading below the low of recent low, that is today's low, 2800 levels, then we could witness some sharp correction in Deepak Nitrates. And we are seeing that way in other chemical stocks as well.
All right, ladies and gentlemen, it's passed off peacefully, the twin weekly expiry on the Nifty and the Bank Nifty. Just 16 points on the green as far as Nifty is concerned, absolutely flat, 90 points down on the Bank Nifty, as is the flat curve on the Nifty 500. Remember, tomorrow is a holiday, then you have the weekend stepping in beyond Friday, and no trader wants to take an overnight risk. So volumes itself are low. There is nothing much to talk about. There are some stocks that have taken it on the chin, such as the metal space, driven by a negative decision from the Supreme Court, allowing states to now charge an extra royalty over and above what metal companies pay for their mines to the central government. HDFC Bank is the top trading counter, 1/3% higher, 2500 crores worth of volume. ICICI Bank, Tata Steel mildly in the red, 1500 and 1400 crores. TCS, Infosys, Apollo Hospitals. These are the stocks that have shown about 1100 crores worth of volumes within the Nifty. Apart from that, you have Hindustan Aeronautics post earnings down 1%, 1800 crores in transaction. Policy Bazaar has been the star of the day in the NSE 500. Very strong volumes, 5.9% higher, and about 1750 crores worth of transactions that have happened. Apart from that, in terms of gainers, SJVN post earnings, a very strong show. There is nothing much to talk about as far as the Adani group of shares are concerned on the market. There is a 3.8% uptick on Adani Energy Solutions, actually 4% uptick now, 1113. Remember, this is the company that has done that 6,000 rupee QIP. This is the only one showing some traction on the long side. Of the 10 Adani stocks, they are down between 0.31%, which is NDTV, and the top fall is, I would presume, Adani Power, 2.2% lower, 673. Otherwise, a flat trade, nothing much to talk about, and individual outperformances have been there, especially in the case of internet companies. So Policy Bazaar, Honasa, Paytm doing pretty well in trade today. Sakshi, yours.
Yeah, just as we are closing, Borosil came out with its numbers. The net profit has jumped 86% at 9.3 crores. Borosil stock has also shot up 4.3% in trade post the earnings. And when we talk about the kind of move that we are seeing on the revenue, it's a 23% uptick, 216 odd crores. EBITDA has improved by 47% to 29 odd crore rupees for this company. Margins have also improved to 13.4% versus 11.2%. So a sharp uptick can be seen on the stock after those earnings have come in as well. We'll wrap it up on that note, viewers. Just like how you asked Shell, the markets have absolutely ended flat, as flat can be, 24,143, just about a 3-point uptick on the Nifty right now. The Nifty Bank ends about 90 points lower at 0.1% of a loss. In trade, several stocks within the Nifty that are holding up are TCS, HCL Tech Mahindra, Infosys, M&M, Wipro. So it was the IT show continuously. 1.5% higher for the index as a whole that stemmed the losses for the markets. Along with it, BPCL, Tata Motors, LTIMindtree, Bharti Airtel were some of the stocks, and even SBI that held on to the momentum. On the downside, Divi's Laboratories disappointed, 4% lower, Hero Moto 3% lower, Coal India, Ultratech Cement, Dr. Reddy's and JSW Steel, the top losers on the Nifty. IT, auto, consumer durables, the three sectors that continued to remain in the positive, rest of them slipped into the red. From the F&O space, Aditya Birla Fashion and Retail making a comeback, 3% higher, L&T Technologies, Samvardhan Motherson, ABB, Laurus Labs were some of the other movers. Within the broader markets, for sure, it was Marksans Pharma up 13%, PB Fintech up 6%, Paytm up 7%. SJVN up about 4% higher in trade. Some of these stocks that were definitely shining bright, but Piramal Enterprises, that one lost ground again, another 10% lower in trade. We'll continue to track all of these stocks for you when we come back on Friday. Until then, we wish you from the entire team of Business Today Television and from both Shell and me a very happy Independence Day. Thank you so much for tuning in. Do stay tuned. There's a lot more coming up even beyond the stock market hours.
Joining us today on the show is a special guest, Mr. Narendra Taneja. Not only is he an energy expert, but he holds a very strong grasp on how geopolitical situations are changing in the Middle East and of course in the US. Namaste Narendra ji, a very warm welcome to you, sir. We'll